Good morning, all. It's lovely to have you here. Great to see some people that we've already spoken to as well. My name is Alan Vincent from RM Boulanger, and I'll be hosting today's webinar on Regime 4200 or Regime 42, as we call it. So we're just going to leave it another 60 seconds or so for the last remaining participants to join us, and then we'll get started. We are going to go through this webinar quite quickly. There's quite a bit of information, but we are going to go through quickly because we want to focus most of the time of this on a question and answer session at the end. So do have all your questions ready. We will be opening the microphones so we can speak live, and we also have a Q&A box at the bottom of your screen that you can type your questions in as we go. Seeing the participants increase is a bit like getting popcorn ready, isn't it? When it stops popping, you know it's ready. When the number stops increasing, we know we're good.
Yeah, that's indeed correct. I just hope you don't eat the participants, Alan. That wouldn't be.
Okay, so welcome to everything you need to know about Regime 4200, and we'll call it Regime 42 all the way through this webinar. Next slide, please, Al. As we all know, and here's the bits that you know, the complexities that have arisen since Brexit created some bottlenecks in the system of exporting your goods into the EU. The customs process became a bit more complex. There was concerns about veterinary and sanitary inspections, and at the time, a huge pressure on the supply chain. Delivery times got extended exponentially at some points, and of course, there has been a new administrative burden on you as the supplier and on your customers in the EU. Now, in all of that, all of the focus seemed to be on the logistics side, but there wasn't enough awareness of the fiscal liabilities that people were going to face, and VAT being the main part of that. And here at RM Boulanger, that is what we specialize in. That's what we do day in, day out, and it needs to be managed carefully. Next slide, please. Now, the reality is, obviously, we're not in the EU anymore, so our transactions are no longer EU harmonized. Now it is an export out of the UK and an import into the EU, and your import customs duties are to be paid in the EU unless your products are of UK origin. That's standard, and all your products imported into the EU trigger VAT, import VAT. Now, I get a lot of customers that say to me, yeah, but we're zero rated for VAT. That's fine, that's sales VAT, but there's import VAT always when you import into the EU, and it's how you manage that, how you manage the reporting or the paying of that import VAT. Now, most European clients in our experience are used to getting their goods delivered on a DDP basis, a delivery duty paid basis, where you as the UK supplier are responsible for the export of those goods all the way from your door to their door, and you're responsible for the customs duties and the VAT, the import VAT on your point of entry into the EU. Now, what we as RMB can do is sit down with you, help map your flow of goods, find out exactly what's going where to which jurisdictions in the EU, and then tell you the best, most cost-effective, streamlined solution for your VAT liabilities. Now, in that, we do have this solution. Next slide, please. So this is a regime that we call Regime 42, and this is where you don't have to be registered yourself in the country of entry, and here we're talking about France being the country of entry, but you do need a VAT number to declare your importation of goods. So you can use somebody else's VAT number, and that somebody else has to be accredited with the authorities. In France and RM Boulanger, we are accredited to the highest level, and as such, we have a separate global VAT number that we can, in effect, rent out to our clients. Now, it's global in the sense that anybody can use it, but it is a French VAT number. So this defines that goods have to be imported into France. Now, what happens then is on your export documentation and your import documentation, you have to specify that we, RMB Boulanger, are your limited tax representatives and that you're using our global VAT number under regime 42. That means your transactions go on our VAT return. So there's no import VAT for you to pay. But it also means that those goods cannot be sold in France. There are no domestic sales available to you in France under regime 42. Those goods must clear in France and be taken immediately or as fast as is reasonably possible to another EU member state for sale. Now, this is a brilliant solution. It's a great regime. It works really well for companies that don't have France as a market, not interested in France as a market. You may have a big customer in Germany, Belgium, Sweden, wherever it may be. And it works really well because you don't have to register yourself. And we use it as a pay-as-you-go system. So you're paying per shipment. And if that fits your commercial model, it is an absolutely brilliant regime. Next slide, please. So here is exactly, the case study that we've just talked about. The benefits of regime 42 is that we can use it pretty much immediately. Whereas getting your own French VAT number would take 3 to 4 months, perhaps, to get bedded in and get up and running. Because our VAT number already exists, and providing we get contracts signed and a setup fee paid, then we can provide you with our global VAT number probably within 48 hours. You could even get a shipment out this week if you chose to do so. But regime 42 and having your own French VAT number, which would be regime 40, they're both built on the same framework. They are both vehicles for you declaring your import VAT to the French VAT authorities as you bring your goods into the EU, with no VAT to pay up front. And this is a DDP solution. I must stress that. You may already be using XWorks or FCA or DAP or any of the other acronyms that we can use to get your goods into the EU. This is a DDP solution. So your goods are shipped from the UK and can absolutely access all of the EU except France, and your customers are not involved in that customs process or that VAT liability in France. Now, the question I get asked a lot, and the question I'm going to put to my good friend Arthur here is, Arthur, regime 42, is it a loophole? Is it going to be closed in the future?
Well, it doesn't seem that way. For the moment, this is not something that we should be worrying about, Alan. I think most important here is that to make sure that all the documents and all the formalities are compliant. This is why we have our highly esteemed colleagues with us as well from both sides of the border, the customs brokers colleagues. Because obviously, if you don't pay any VAT on import in France, it does stress out the French tax authorities a lot, because they want to know that there is no misinterpretation or misusage of this specific exception, basically on the general rule. So I don't think we should be worrying about that. It's just a matter of well framing your activities and well documenting everything, following the guidelines of ourselves and our colleagues here present, Emily and Ian. So basically, the chain of events is always the same. Even in regime 40, as you said, 42, the framework is always the same. You have the export formalities from the UK. Ian will be the one telling you a bit more about that and especially answering your questions a bit later on. Then you have the import formalities. This is done again by yourself, because as you said, Alan, DDP means you are importing yourself your goods into France. You are doing all the formalities yourself. You're not asking your client to take care of anything. You are managing everything yourself. And there, Emily and the team with BBL will be more than happy to help you as a French customs broker and to manage your formalities and obligations from a customs perspective in France as well. And we as RMB Boulanger, well, we basically represent you from a fiscal perspective. We lend you our global VAT number. Why? And maybe if Anne, if you could go to the next slide, it will be more visible for the people. When importing the goods into France, and you are the importer of records, what you basically do is after import, you have your intra-community delivery. You deliver from France to Germany or to Belgium or to Greece or to Bulgaria, Lithuania, whatever the European Union country would be. And this is basically the same thing what you did before Brexit. You deliver it from one European country to another. This was an easy delivery, zero rated VAT on the sales invoice, obviously. And there was an exception rule for that. What you will be doing again now with this regime is basically the same thing. But from a European perspective, the country of departure is not the UK anymore, it's France. So for your client's perspective, they're buying from France because you have cleared your goods and put it in free circulation in France. Sorry for running this through very, very fast, but I would like to give the word to Ian, and then after Ian, Emily, just to quickly present yourself, guys, and then we'll be happy to accept all the questions from our audience. Go ahead, Ian.
Thank you very much, Arthur. Yes, there's three parts to this picture. The fiscal representation, which is obviously RMB, Unsworth and BBL. BBL will just be talking to you in a short while. Unsworth, we do the export part of the picture, basically. And as you can see from our nice slide here, we've been helping people with their logistics and exporting and importing since 1974 on a global scale, so you're in good hands. More related to this talk about the Regime 42, we've been working with BBL and RMB Boulanger for the past 18 months or so to excuse me, to refine the process and just make it as simple as possible for companies like yourself to export to the EU and maximize the opportunities that you have with your partners in the EU, and just basically so that you can hit the ground running with a well-oiled machine. In terms of the actual role that we play with the Regime 42, it is the smallest part of the three. Basically, we just do the export declaration for you. There's a couple of bits and bobs that we would do around that. We would verify the documents that you send us, check the tariff codes, check the amounts, just make sure that everything's all okay before we proceed with making the export declaration. Secondarily, actually do the export declaration and make sure you get a copy of that. Make sure that your haulier gets a copy of that so that they have the MRN barcode. We deal with the interface management as well, so that any snags that come up during the process, we deal with BBL and the hauliers, just make sure any problems are expedited and just smoothed out before it becomes a bigger issue. And finally, if you don't have a haulier or you're struggling to find hauliers that will take your load, we work with a pool of like-minded hauliers that can assist with the with the transportation of your goods out to the EU. So that's basically, in a nutshell, as to what we do in the Regime 42 process. I'll take any questions on that when we come to that part of the show. And I think I'll just pass you on now to Emily, who can discuss what BBL do.
Good morning, everyone. So today I'll be speaking on BBL behalf. So BBL is a French agent, customs agent based in France and dedicated to Brexit flows only. So we know how important it is for British shippers to keep their EU clients and make their life easier, considering the customs border put in place now. And this is why we have invested in hiring customs experts to make the import clearance process very smooth. Since the beginning of Brexit, we have hired 10 experienced customs brokers and managed to solve every issue that may have been caused by the Brexit. So today I will do a kind of recap of the smart border and the clearance process under Regime 42. So next slide, please. So the smart border was created in order to avoid huge traffic jams on ferry and shuttle terminals on both UK and French sides. The process of the smart border is quite simple. It consists in raising both British export clearance, so raised by Unsworth, and French import clearance documents before crossing the channel. And it allows the driver to pass all customs control and deliver without having to involve any other party with customs formalities. Before the BBL and Unsworth raised the export and import clearance, you send the commercial invoice and the packing list to us. And as Jan said, we check that everything is okay before we proceed. So BBL and Unsworth will respectively raise the export clearance, the EAD documents, and the import clearance. So the DAU document, as you can see on the slide right now, it's a DAU. And we also send a barcode picture on the right, and it will be the document that will be scanned by the driver on the British side before the boarding on the ferry or the shuttle. So the DAU, the document on the slide, is the customs clearance you have to archive. It's the proof of importation of the goods on the EU territory. So if you have any issue with the customs in a EU territory, it's the document you need to show them. So this DAU you have on the screen is raised with regime 42 under DDP terms. So as Arthur said, you are the importer of records in this situation. And on this DAU, there is no VAT, and there is RMB Boulanger VAT number. So next slide, please. Once arrived at the British border, the driver must scan BBL's barcode and Unsworth EAD. In case of multiple barcodes and EADs in the trailer, the haulier can create what we call a logistic envelope. It is one global barcode, including several French barcodes or transit documents. And it has been created in order to avoid the driver having to scan 20 or even 30 different barcodes in case of groupage, for example. So the pairing will be achieved by the smart border system. The trailer registration will be caught by cameras and will be paired with the scanned documents. And the barriers will open and let the driver board on the ferry or the shuttle. So next slide, please. During the crossing, screens, like you can see on the slide, are arranged on the ferry and on the shuttle, and it shows if the trailer needs to stop once arrived on the French terminal. So the driver will see an orange line, or if he can go straight to its delivery place, and it will show a green line. So there will be two possibilities: the green line, and it means the driver can deliver. It means the goods are cleared and are now into free circulation into the EU. And if there is an orange line, it means the driver has to stop. There can be an orange line for several reasons. It can be because the routing declared on the clearance has not been respected by the driver. So the driver went to Calais instead of Dunkirk or the contrary. Or it can mean that the customs authorities wish to do a control on the truck. It can be either a documentary control or physical check. So finally, it's really important for the driver to check the screens and respect precisely the line announced by the smart border. Because indeed, in case of orange line, no barriers or equivalent physically put in place by the authorities will prevent the driver from leaving the terminal. So this means that the driver really has an important responsibility in the customs process. If they do not follow the orange line and leave the terminal, it is considered by French authorities as a serious offense, and a serious fine will be applied to the company. So that's pretty much all you need to know about the clearance and smart border process to be ready to use it.
Lovely, Emily. Thank you very much for this overview. I can see here that we have also we show how this really looks like, Emily. I don't know if you want to comment on that.
And so, yeah, I forgot to state about the BAE. It's the status that means goods are cleared and into free circulation into the EU. And in French, it means bon à enlever. And so, yeah, it means goods are cleared. And if the status is invalid, so at the bottom, it means that there is either a control on the truck or that the truck did not respect the routing, as I said previously. And those are both status that will appear on the DAU and that BBL will check, and we will proceed to with the authorities if there is a customs control. And if it's just an issue with the routing, we will manually change it on the DAU, and the truck will be able to go.
Brilliant. Thank you, Emily. Excellent presentation, guys. Thank you for going through that, so much information so quickly. And I know that to the people listening, it can sound a bit daunting. It sounds like there's a lot of paperwork to be responsible for as you as the supplier, but you must understand that it is using our global VAT number. It is in our best interests to make sure that your paperwork is pristine, to make sure that your deliveries go through without any controls and without any glitches, because if the VAT man comes knocking, it's us that he's coming knocking for, because it's our VAT number. So we absolutely handhold you through the process alongside Unsworth and BBL, handhold you through the process of that paperwork to make sure that that process is as simple as possible for you, and that paperwork is as clean as possible for the whole supply chain journey. So thank you very much to our presenters. Thank you very much for your attention. I will now open the floor. Please open your microphones, come off mute, if you can bring them all off mute, and that'd be great. And if you have any questions, please shout up and we'll pass them on to the relevant expert.
If I may, Alan.
Hi, Safe.
Hi, how are you?
Very good, thank you. Yourself?
Good, thanks, good. Alan, I still have your proposal from last month, and we are very much inclined to go down this route. Of course, there were several questions which were raised within the company. One of the key question was importer of records. So how long would the likes of France and the Netherlands, hold on to a non-established, non-established EU company, well, a company non-established in the EU, become the importer of record? Because, for example, in Germany, it's only for 9 times a year you could be the importer of record. But would that still be the case indefinitely for France and Netherlands, or would at some point Brussels intervene and say, hang on, no, we need to make this even throughout the Union, so we'd stop becoming the importer of record? Because apart from the VAT, the import of record is another important aspect which needs to be named on the import declaration.
Yeah, very much so. And what you've highlighted there is that the individual EU entities, the countries, all have their own interpretation of their own VAT rules and their own import and export rules. And then there's EU law, which kind of sits above that. Now, there is absolutely no indication from France that they are going to follow the German model of limiting the amount of imports into the country, where the third country is the importer of record, so the UK company is the importer of record. And they have worked so hard on making France the most attractive country to be the sole point of entry into the EU that would be counterproductive for them, I think, in the medium and long term to introduce that kind of limit. So I don't see that happening at all. Obviously, I can't predict the future, but there are absolutely no indications, zero indications that that would be the case in the short or medium term, next 5 years, for example.
Okay.
I don't think so either. To be honest, if I can add something to it,
Sure.
They have invested over €1 billion in the Calais port to make it modern, so that this smart border would work. And obviously they need to, well, get the money back now, earn it back now, of course, and you can do that only by having this commercial activities back and forth through the channel and the tunnel. I think here the question is really something that is Germany specific, and we are aware of this problem. Many companies have that. Fortunately for us, France is not going that way. To be honest, I don't even know why Germany did, and we have solved this German problem for many of our customers by saying, guys, because many companies have, for example, a warehouse in Germany or a distribution center or whatsoever. So
like we do, yeah.
And so the solution was then simple. Why should you have a French VAT number? Because you don't have any operations in France or from France onwards. You have a warehouse in Germany, and all you need to do is get your goods to Germany, so that you would then distribute from Germany because you have a German VAT number you already set up from years and years already before. Well, Regime 42 would be perfect for that, because you can then use France as a kind of a tunnel country to just go through it, but at the same time already having your goods cleared at the entry point, instead of using transit documents, and which are, by the way, more costly. But besides that, a transit document, a T1 that is, for example, badly created or whatsoever, there is an error on it, the Germans will send you back to the entry point, which is France then, and so you end up driving back and forth from Germany to France, really not effective and efficient. So I think in that sense, we have, well, if I may permit myself saying, that saved a lot of companies and a lot of money for those companies by just saying, guys, just go through France, use our VAT number. It's like a rental vehicle, basically. You rent a car from us, and as long as you use it, you pay it. And we just make sure that the documents are there and they are compliant. As Alan said, we bear the responsibility together with BBL and Unsworth. We share that responsibility. So here, the only challenge is make sure that these documents are in order. That's it for me.
And so if we clear the goods in France now, because we do have this warehouse in Germany, the goods would need to travel to Germany in any case. So would there need to be a sales invoice from France to Germany?
Well, yes and no, it depends. If you go directly to the German client, then you could make a sales invoice and use our French VAT number to basically perform an EC sale, as you did before Brexit from the UK. But
well, it's our own warehouse, and we are not established in Germany, but we do have a German VAT number.
Oh, you don't have a German VAT number?
No, well, we do have a German VAT number, but we're not established in Germany. So we're still the owner of goods. We're not selling to anyone in Germany.
Well, what you're doing on that point, Saif, is that you're basically transferring your own goods from the UK to Germany using our French VAT number to do the EC transfer from France to Germany to your own VAT number. On that point, there is not really a sale. That's just a transfer of own goods that must be documented in the VAT return and interest that return.
Right.
And that's the whole obligation of it.
Right. Okay. And from then onwards, we're happy to sell.
And then you do your activities
from Germany. Yeah.
I mean, you have your German VAT number, and that is where you are selling from then, or distributing from. This has nothing to do anymore with customs or with France, to be honest. This is irrelevant then. I can see Anthony also had a question. Anthony, are you there? Do you want to ask your question? No, I misunderstood maybe.
No, not me.
Oh, I saw you pop up the screen here, and I thought, well, Anthony has a question.
I'm sorry.
No worries.
Then the floor's open. Anybody else?
Yes, can I ask a question?
Hi, Sanjay. Yes, of course.
Thanks, Alan. Thanks, Arthur. Sorry, I started a little bit late, so I missed the starting bit. So the first question would be, is this slide available to view a little bit later on? I can see this is being recorded. So if that's available, then I can just have a quick look. So firstly, apologies for that. I did got the invitation a little bit late from my colleague, so it's my fault. So the question I wanted to ask was, does it work round trip, like if it was the situation the other way around from France into UK? Because I'll give you an example. I've got a customer who buys from various suppliers within the Europe. So it could be buying from Italy, Germany, and so on. And all of these companies, they require a kind of EAD document on the way out in order to suffice with the customs control. So my question is, regime 42, will it still apply on outbound from France into UK? So that was my first question. And second was, what happens if we also get this household goods and personal effects removed, which has a final destination, for example, in Greece, but they choose France as the point of entry? Obviously, they are not VAT registered, but how do we obtain a clearance in order for the driver to avoid going through the T form scenario? Like presently, what we are doing is we're raising a T form to avoid the kind of hassle at France. So they can just straight away go down to the destination office and discharge of a T form in order to open the clearance.
Right. So to answer the first bit, yes, absolutely. The slide deck and the recording of the webinar will go out to all the participants today. I'll pass the other side of the question over to Arthur to talk about the technicalities.
I'll go to the fire line. Don't worry, I'll go to the trenches. Question, Sanjay. A very interesting question. Well, first of all, regime 42 would of course work 2 years from now in the UK because it would be still in the EU. Now it doesn't work anymore. As far as I understand, if you have multiple suppliers in the European Union, what a solution could be then to have one VAT number, for example, in France, to consolidate all the purchases that you've done in the European Union in France, and then export all it in one go, basically, to the UK. Or either we can help your suppliers, for example, exporting DDP to the UK and making sure they deliver duty paid to you in the UK. So both scenarios are possible, but not with regime 42. Regime 42 is really made for, well, importing goods and then selling or transferring them onward to another EU country. So it doesn't work the other way around. And your second question, if I'm not mistaken, if I understood it well, was regarding the T1. So the comparison that you've made, that if you made a transit document, you enter France, but you just drive through the Union and then you go to Greece or whatever the other country is, and then you discharge there. With the regime 42, this is not the case. Emily can probably support me in this here, but the goods are cleared and put into free circulation already in France, and by extension, by doing so, in the whole European Union. So you're then free to move. The only thing what you are obligated to do is to make sure that you predefine the destination, basically. So you can't just import and say, I'll have a look whenever I feel like to import to that or this country. You need to say in advance, these goods are going to Lithuania or to Greece or to Germany. That's the main requirement. Why? Because the customs need to absolutely be sure that goods are going away from France and that this is predetermined, basically. Right, Emily?
Yeah, exactly. Yeah, that's it.
I'm getting good at this thing. Thanks, Emily.
Sorry, one thing. Sorry, I mentioned the last point. The goods will be personal effects household goods. It's not commercial cargo. Because commercial part, I can use the regime 42 as you explained.
Would you mean then B2C sales? Is that what you mean to private individuals then?
Yes, that's right. Yeah, household goods and personal, because people do relocate to, because they have their secondary houses there in Europe. So some of them, they relocate on secondment. Some they get married and they move over there. So we have personal effects household goods regularly moved. So
by using regime 42, we always need to have a VAT number in the country of destination. So if the goods are going to Greece, then we need to have a Greek VAT number, and that would be the person who is taking over the ownership of the goods. So we can't use that for private individuals. The only thing what you could do is if you have, for example, a warehouse in another country, and this comes down to the question of Saif before, where you would transfer first your own goods to that other country. In that example, it was Germany. And then from that country, from that warehouse, from that VAT number where you're registered, deliver then to the final, private individuals as a B2C delivery rather than B2B. But regime 42 is only reserved, basically. It's only the
designed for the commercial goods. Sorry to interrupt.
Yeah.
I think so. Yeah. So I think so. There is no like for the individual. I don't think so. They will be applying for a VAT number because they are not required to.
Of course.
Because it will be always GDPR from here in UK, and I was under the impression that there might be a way whereby we can obtain the clearance in France itself, knowing that goods are going to be delivered to.
Oh, in that sense, you will need to have a French VAT number in that sense. If you are then providing the clearance for your destinies, then you are then obliged to have a French VAT number, clear the goods on your own name. Use the postponed VAT accounting in France if you'd like, so that you don't need to pay any VAT on import, but then you have to be registered in France for VAT. You can't use our global VAT number in that case.
All right, okay, you can't be shown as a declarant then, basically.
You can't be what?
You can't be shown as a declarant. So basically, if the goods are coming into France and these are private individual goods, so again, I don't know what's the version down in France, but we use a GBPR. GBPR is GB private individual, which doesn't have an EORI number or a VAT number. So once it arrives into France, I would be in an impression that, well, there would be an agent out there who would be able to clear the goods.
Oh yes, of course. Then you clear it on the name of the private individual. You pay VAT. They pay VAT on import, but this is then private individual clearing. I mean, this is the standard, as you say it. But then then the private individual is liable for everything in that state.
Yeah, sorry, I'm not dragging this, but what happens in the scenario, because these are used household goods. So when I say used, there won't be any taxes. So would the customer be obliged to pay tax to get in order to obtain release on the goods? Because what we are trying to avoid is why would I be paying on my used clothing when I know it's for my personal possession? I'm not bringing the goods for commercial basis. I'll be just relocating. So it's just my personal belonging. So why would I be paying taxes to the authorities?
I understand, yes, but this is really private individual.
All right.
Basically, it's luggage, Sanjay.
Yeah.
In a sense.
Okay.
I think Emily.
No. It's all right. No, I really appreciate that. Well, I had this gray area I wanted to clarify, but obviously, I can see that your regime 42 is more designed for the commercial goods, which again, thank you very much for sharing the information. So it is feasible to bring in inbound from France into UK by consolidating all the invoices with your VAT number, or probably you become the purchaser, i.e. we will just get all the suppliers within the Europe to raise an invoice to your company, and your company does one invoice to suffice the process, the customs process.
No, we would register your company as the one who is receiving it in France. You don't need to sell it to us.
All right, okay.
But if you'd like, Sanjay, we can have a private chat together later on today or tomorrow to really say it into details. And in the meanwhile, we can send you then the part that you've missed. But this is something we definitely can discuss together in a private conversation.
Brilliant. Thank you very much. Thanks for your help, and really nice talking to you. Thank you.
No problem. Likewise.
Okay. So we also have a question from Erica. Can we use regime 42 if your invoice is for Germany but your delivery is in Poland? Yes, absolutely. Yes, you can. Nice and simple answer. And also from Morton, sorry. Will this procedure and will regime 42 apply on commodities destined for example, Poland, entering France from the UK, undergoing food and health inspection in Calais, or does the CHED block this procedure? As far as I'm aware, no, the CHED does not block this procedure. Regime 42 is applicable in that scenario, where your goods will, whatever your goods are and whatever checks need to be taken. If their goods are not bound for France and they are bound for elsewhere in the EU, regime 42 applies. Regime 40, again, built on the same framework, works the same way, but regime 40 dictates that the French VAT number that you have is yours. You're the importer of record under your French VAT number. You're not renting ours. And in that case, everything is exactly the same, except that France is now open to you as a marketplace. So you can sell domestically in France as well as the rest of the EU, and you will have to do a declaration, a VAT filing every month, whether you trade or not. You have to do a €0 VAT return at the end of the month, even if you don't trade. So it's Regime 40 is a stable, long-term solution applicable for companies that have business in France, and it's like I say, they're both based on the same framework.
Alan, maybe just to be clear for the people that are not very familiar with this terminology of regimes, regime 40 is basically the classical thing. This is what you always do in every country. You import your goods, you do the customs clearing, you identify yourself as the importer. For that, as you said, you need a VAT number. And in a classical situation, you would then pay duties and VAT, unless there is an exception. And in France, there is, because if it is UK origin goods, you don't pay any duties. And on top of that, in France, we also have a postponed VAT accounting, as you know it in the UK, it just called differently, but it's the same thing. But in order to do that, you need a French VAT number. This is what regime 40 is. It's the classical clearing and putting goods into free circulation in France and in the EU by doing all the classical formalities, being registered for VAT. So just to make the clear difference between those two regimes for the people that are not very familiar with the terminology. Alan, a question that we receive very often: do we need to have a company for that in the EU or not? Can we do it as a British company? I think
it's a great question. It's a great question that comes up all the time. And the very simple answer is no, you don't need to be established in the EU. You're having your own French VAT number, for example, or using ours. It's the French VAT number that acts as your VAT liabilities in France and therefore the rest of the EU. But all of your other tax liabilities, your corporation tax, your social contributions, whatever else that may be, stays in the UK. It's a UK owned VAT number, or a UK rented VAT number in the case of regime 42. So you don't need to be established in the EU anywhere. And there's been a lot of misinformation over the past 18 months about that. But I want to make it absolutely clear, you do not need to have an establishment in the EU in order to benefit from this tax regime.
You know what's funny, Alan? The thing is that regime 42 can basically be used by both supplier and buyer, because imagine you would have a flow of goods going from the UK to Spain, for example. We could represent the British company and say, well, you can use our global VAT number to do the subsequent EC delivery from France to Spain to a Spanish customer. But in many cases, we also represent the Spanish company, because for some reason, it's the Spanish company that wants to be the importer of records and not the British one, so the buyer. And so it suffices for us to then just represent the Spanish company, to rent our number, a global number, not to the British one, but to the Spanish one. And so the Spanish can do then the EC delivery from France to Spain to themselves. So both scenarios are possible. It's just a matter of, a good conversation with your client and, well, determining who is doing what and where your responsibilities end and where their responsibilities start. But so basically our global VAT number can serve both
ends,
the buyer and the customer, using France as a tunnel.
All depends on that commercial arrangement. The difference between DDP, which is you taking responsibility from the UK all the way to your end client in Spain, or maybe DAP, where you're going halfway, you're getting it out of the UK and your Spanish client is importing into France. Well, if they're importing into France, they need a French VAT number, either their own or they need to borrow one. So it's the same scenario. The Spanish customer can use regime 42 to pick it up there as it comes into France and take it home, if you like. We also got another question from Safe about EORI numbers, Arthur. Now, the EORI number is a identifier number for customs. That's all it is. It's nothing to do with the VAT. It's an identification number for customs across the EU. Now, Northern Ireland, where you may have an XI EORI number, it is technically still part of the EU, but the political landscape regarding Northern Ireland is tumultuous at best. And we don't know what it's going to look like next week or next month, certainly not next year. So we advise all of our clients to have a mainland EU EORI number, which you will need to export your goods into the EU. You must have an EU EORI number. Now, what happens, Arthur, if a company like Vitaflow have an XI EORI number already, obviously understand that fragility of it, and want to get a mainland or French EORI number? How do they just cancel their XI EORI number?
No,
Does it
not at
cancel
all.
automatically?
No,
Because-
no, not at all.
Because Germany has refused us, they've said, no, we requested quite a few times.
Yeah,
And their
and-
standard answer was, Germany said, look, it's not us, it's Brussels. They have refused. So it's not coming from Germany, it's coming centrally from Brussels.
Yeah, that's indeed the case, Saif. And we had it was a bit confusing because in the beginning of Brexit, beginning of 21, they accepted these XI numbers, EORI numbers for some reason. Was it because they didn't know it themselves? Was it because there was confusion? I'm not sure what happened with that, but just to be clear, since long ago, we recommend everybody, if you have an XI number, that's fine. Just use that for your Northern Irish business and activities. So that's perfectly fine. But for the EU imports and movements of goods, do have, please, a European one, whether that's an Irish one, a Republic of Irish one, or a French one, or a Spanish or a Belgian one.
No,
It
they won't.
doesn't
They
really
won't.
matter.
They won't give us. Germany is refused. They said Brussels are refusing.
That's Germany.
No, well, they said Brussels are refusing 2 EORI numbers for the same British company, and that wasn't clear. I sent an email to them, and they said,
Oh.
no, we can't give you another EORI number only because you have an XI. And I told them that, look, XI EORI number is only for the use with TSS, and all British companies applied for it because we were all using TSS. We're not established in the in Northern Ireland. We're not established in the EU. Could you please give us another number? And they said, no, because you have this XI, we class this as European. You can't have another EU EORI number.
We do not have this problem, Saif, in France because we just ask a French one and we never had to cancel the XI ones for that. So I'd suggest in that case, ask a French one, use the French one for the French part and use the XI for the Irish, Northern Irish part. Just to give you an idea, we had many cases where people had simultaneously a French one, a Spanish one, and a Belgian one, which is really not allowed because you
Yeah, it doesn't. Yeah.
So it's basically what I'm saying now. I think from a software perspective, it's probably possible to have multiple ones. That the Germans it's interpreted that way, or that they say Brussels interpret that way, that can be. But in any case, we as a company, having registered hundreds of companies for a French EORI number, a part of them having obviously also XI numbers, never had a problem with that. I can check that with my other colleagues, but I didn't experience any problems with that.
And if we do need the French EORI number, would we first need to apply for the French VAT number?
No, it's not linked to each other. You can have a French EORI number because you are importing into France with regime 42, for example, and it's the first time, and you can ask an EORI number in France. It does no, it's not linked, not at all.
And could we connect our DE German VAT number to the French EORI number?
Of course, that's the whole purpose of it. Yes, and we will handle that for you.
Thank you.
Great stuff. Thank you for that. So a question from Gary. Does this procedure mean you become jointly or severally liable for each clearance? So, for example, if the goods are not found to be as described, will you, I take it you mean RMB Boulanger, be liable for any customs action? No, it doesn't mean that. We're not jointly liable for the customs part of this. We are your limited tax representative for the VAT only. It's nothing to do with the customs duties or customs import. It's the import VAT only is where we take the liability.
Yes, it's Alan, but Emily will be taking over the customs responsibility. Emily, would you comment on that?
Yeah, it's BBL who will be responsible for any customs action and will be the direct liaison between you and the customs authorities.
Just to be clear on that one also, because I have experienced this before with many of our clients. BBL will be acting as an indirect customs representative in this case because they are representing a company that is non-established in the EU as the importer of records, and BBL is happy to do that. Not all customs brokers are happy to do that because, you know, everybody make their choices and their strategy in the company. Not a bad word about anyone, but just so you know, if companies say that, if customs brokers say that they can't import on your name because you're not established in the EU, that's not completely true. It's just that they don't want to be indirect representative and take co-liability, shared liability from a customs perspective with you. BBL will be more than happy to do that, and Emily knows very, very well what she's doing on that point. So I have all the well, confidence that this will go just fine.
Thank you.
Brilliant. Thank you both for that. And to Christina, if you use regime 42 and clear the goods in France to send to an onwards European country, do you pay the import VAT in France or the final destination country? The import VAT is liable where you clear the goods, Christina. So it's in France. And because the reverse charge mechanism is mandatory, and because on regime 42, your transactions going on our VAT number and our VAT return, you have no VAT to pay, as in there's no cash to change hands. There's nothing to pay and then claim a refund for, so there's no cash flow tied up, but it has to be declared on a VAT return, and your transaction will be declared on our quarterly VAT return in that for France.
And interest that return, of course, because you're moving goods from one country of the EU to another. So this is an obligation that is linked between each other. The VAT is not to be paid, is allowed not to be paid because of the fact that these declarations are done, because you are submitting an interest that return, because you are filing that. And so the customs authorities and the tax authorities are aware of what happened and etc.
Perfect. So we have a bit of a case study from Paul, exporting from the UK to Spain, pharmaceuticals, and in France there is an import permit is required, and in Spain an import permit is also required. The importer owns a Spanish EORI number and a Spanish VAT number. Can the importer declare the goods in France using regime 42 and then transport to Spain in free circulation, which import permit must be supplied at the time of clearance, the one for France or the one for Spain? Arthur, that's all in your wheelhouse. That's
not at all. Not at all. Let's pass it out to Emily. I think this is a customs.
Emily, that's all yours.
It's a customs thing, but one thing is for sure, and this must be studied separately. I would say, Paul, please contact us directly. We can study that with the team. But I think when you're using regime 42, you are clearing in France, and so all the, Emily, correct me if I'm wrong, but all the documents or permits or licenses that you need to have should be then also be valid in France because you are clearing in France, isn't it, Emily?
Yeah, exactly.
So just keep in mind, even though it's a specific regime and it allows you not to have a French VAT number, you're still clearing it in France. It's not a transit, it's not a temporary thing, you know, it's nothing of that. It's clearing in France. And so if the products are, you know, liable for any other additional permits or whatever, we're happy to study that with the team and give you a very detailed answer on that. Maybe we can, you know, use the Spanish one to convert it to a French one. I don't know. Let's have a look on that in details afterwards, but it needs to be taken care of in France because you're clearing in France.
There's another question that comes up quite a bit, Arthur, as regime 42. Is that a French thing or is that an EU thing? So, for example, if you were importing into Germany, could a German-based company that was fiscal representative and had accreditation in Germany have a regime 42 VAT number that they could hire you, and you could do the same thing, clearing in Germany and then being open to the rest of the EU? Does it work that way with other countries, or is it particularly a French thing?
It's certainly not a particular French thing. Again, Emily and Ian as well, they can confirm that customs regulations are quite unified in the EU. So, of course, there are some, you know, variations in interpretations maybe by local customs authorities, but in its all, rules regarding customs and also, you know, duty rate and all that, this is unified for the whole of the European Union, for 99% probably. And So it's definitely not a French thing. Now, maybe Germany is a bad example because they have quite specific interpretations of a lot of things
Yeah,
nowadays.
pick the wrong country there, didn't I?
But yes, why not? Why not using that same setup with any other country? Again, there are specificities also from a fiscal part. So from a customs part, it will be maybe the same, but the fiscal part, the VAT part will be treated differently. For example, in Greece, I know by experience that it does exist, but it's treated differently. So it's really case by case. We need to study it, but the principle itself exists throughout
across the board. I know that the French authorities are the kind of easiest to deal with in the regime 42 setup, but it's a European regime, not a French regime.
I'm not sure if they're the easiest ones. Maybe it's just because Emily and the team are so well in what they do, and so the French tax authorities, they just don't annoy our clients. Maybe that's just the reason. I'm not sure, but in any sense, yes, it is quite fluid. Don't forget that we've been doing that for 40 years now. It's new for the British companies, obviously, but what we are doing here, we're doing that for 40 years already with our boulanger for Americans, for Mexicans, for Canadians, you name it. So it's definitely not a new thing. And if the customs authorities trust the partners that are involved, obviously the process is quite fluent because they know that both BBL from a customs perspective and RMB from a fiscal perspective will make sure that everything is compliant. And that's the key really to success, I think.
Perfect. Okay, so we have a couple of minutes left, ladies and gentlemen. If you have any other questions, please shout them up now, and we can maybe just get a couple more in before we finish.
I think
go on, Arthur.
The most important thing here is guys, just to reach out to us, ask your questions. I think that a lot of people just maybe don't want to ask their questions in public. The slides and the recording will be shared to everybody if you want to review it or share it with your colleagues. But reach out, ask your questions. We're happy to help. Alan, maybe a last one. I can see Thomas is asking a question.
Yeah, so Thomas, so selling to French customers using DDP, it's very simple. You must have your own French VAT number. If you want to sell on a DDP basis, your company, your UK company, must have its own French VAT number in order to facilitate sales to your French customers.
Other than that, again, the framework will be the same. Emily will be still happy to clear the goods. She will be still acting as an indirect customs representative and all that. And again, no VAT to be paid. Probably also no duties as well. If your goods are UK origin, then you certify that. But yes, the biggest difference is that then you will need to have a French VAT number, because Emily will need to have that French VAT number to postpone your VAT, to make sure that you don't pay any VAT. Because the other basically scenario is being a private individual, which of course you are not, because you are a company. So even though you're not registered in France for VAT, you still have the obligation to do so because you are a company. So please do not use, for the people that are aware of the concept, you could choose to identify yourself as a private individual. Please don't do that. You are still a company with commercial activities. You need to be VAT registered in that case.
Okay, thank you so much. Thank you so much to our presenters today and for your attention. Our contact details are up on screen. If you're UK based, please feel free to phone my mobile. My number's on there. Happy to talk to you anytime. Likewise with the other people, with Arthur, Emily and Ian on there. And we will be in touch shortly after this webinar, just to give you that, give you the slide deck and give you the recording and offer you any kind of